My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 14th, 2021, and Bitcoin is looking rejected. All right, we're on the 4-hourly time frame, and yesterday we had said that Bitcoin was targeting 66,000 thereabouts, on it depends how you want to look at it, an inverse head and shoulders, or sorry, not an inverse head and shoulders, a cup and handle formation, as some people saw it, or as we said, it was simply just the C wave of an ABC, right? Because we looked at all of this as being a big A, B, C, or if you want to say more technically, sort of more correctly, W, X, Y, complex correction. And in that Y, you have an ABC flat. Is it a flat or a zigzag? Looks like a zigzag from here, but we'll zoom in and see. Anyway, you have this ABC correction, and we are basically just executing the C wave. And I say Bitcoin is looking rejected because we were not able to hit our target of 66,000. We fell short. And similarly, right now we're in a B wave, and we're in the C wave of the B wave, which we all know is the impulsive portion of the B wave. And we don't seem to be able to hit our targets, okay? And I'm going to get into that more specifically. So high time frame, what are we seeing? So 4 hours, 4-hourly time frame is high time frame for us, as this is a daily show, and we've been tracking this for quite some time. What we're seeing now is this, right? Zooming out, we have the A wave, the B wave, we're in the C wave. We were in for the past 3 days. Let's see. For the past 3 days, almost 4 days, we've been in this 2-wave correction of this 5-wave impulse down. The C 5-wave impulse down. And actually, the target for this is very simply taking the trend-based fib tool, taking the length of A, the retracement of B, the target again for this, I don't know why I keep doing that, is 58 to 55, all right, 58.3 to 55.9, all right, but I have it down here, and I'll tell you why. So this is typically the C wave targets between the 1 and the 1, 2, 3, 6. However, my target is down here at around 53. I think that is purposeful, or maybe I just moved it there. I'm not exactly sure, but we'll get into that in a second. Anyway, so basically I see us now in this wave 1 we did right here, and now we've been in wave 2 for the past 4 days, right? Now, we had trouble with wave 2. Most people have trouble with wave 2, as most people have trouble with complex corrections. That's why they're called complex corrections. They're hard to read. They're not impulsive, right? Everybody can trade an impulse. Everybody can trade the 1, 3, and 5 wave, right? They're just going up and down pretty impulsively. The tricky bit, and where you really make your money as a trader, where you have an edge as a trader, where you can beat the market as an investor, is looking at corrections and looking to enter or exit positions in corrections, or during corrections, or after corrections, or before corrections, okay? So zooming in to a smaller time frame, we're going to go into the 15-minute time frame. And we see here what I was talking about. And just reiterating this really quickly, if you're subscribed to the channel, please allow just a quick repetition of this. Basically A, B, C, or more appropriately, W, X, Y. Okay, and we were in the Y portion. And so you could have done this with just using pattern analysis, seeing that as a descending wedge, and then the target for that descending wedge, as most people stated, was 66K, just basically taking the length of this, superimposing it at the site of breakout. That's how a lot of people got this, but we didn't hit that target. Okay, where did we go? We got rejected at 65.5 pretty much. And shout out to our friend who shorted a bit prematurely and had a liquidation point at this level, I believe he said. I hope you didn't get stopped out or liquidated. All right, but just be careful with your entries, please, because we know that in these WXY or complex corrections, you always have a bit of balance, right? So if W's coming up here and X is doing this, you're going to get your Y. And this is what we were looking for. This is basically where we said, okay, we're going to 66K before turning back around. And now we are turning back around. So let's zoom into this turning back around. And I really want to draw your attention to something that you don't see every day, and which is really cool. So this is really cool. And stay with me here. Okay, so we all know that the last part of a B wave. Sorry. What am I saying? Okay, after we got B or X, right? We got. Let me zoom out 1 second. I'm confusing myself. Okay, we got our W, X, Y. Okay, within our Y. Okay, here we go. Within our Y, we have an A, B, C. Okay, this C wave is basically an impulsive wave, right? We should get 5 waves up. All right. And here we got an A, B, C, but we have a very, very particular 5 waves up. And that's what I want to show you. And you don't see this every day. But sometimes you do. And it's very, very cool to recognize once you do. 1, 2, 3, 4, 5. Okay. I know what you may be saying. Wait, Dean, that's not a possible wave count because 5 is below 3. 5 should be above 3. And I would say to you, no. That is not one of the principles of Elliott wave impulses. Elliott wave impulse has 3 principles, 3 hard and fast rules. Wave 2 cannot retrace below the origination point of wave 1. That's the first rule, okay? The second rule is wave 3 is never the shortest wave, okay? It doesn't have to be the longest, but it can never be shorter than both wave 1 and wave 5. And then the third rule is that wave 4 can never come into the territory of wave 2 unless it's a diagonal, okay? And so here we have wave 4 coming into the territory of wave 2 and wave 5 ending short, okay? That means this has to be a diagonal, 1. 2, it means that we've gotten rejected, right? There was staunch resistance right here. We hit our third wave, and you can see that in the stochastic RSI as well. If you look, you see, well, we have to go into smaller time frames for this. You see that in the stochastic RSI. You see 1, right? You see wave 2, the complex correction of wave 2 here. You see wave 3, right? Which is the top here. So you see 1 top, 2 tops. You're waiting for a third top, right? Wave 4, simple correction, but it's not a simple correction. Why? Because this is a rejection. So wave 4 retraced way more than it should have. And so you get a kind of relief wave 5. But you see, you can count Elliott waves using the stochastic RSI as a help to see the three tops of your impulse waves, right? So you have one top, two tops, and then you have your third top, right? But typically that third top, which is the wave on the price action, ends up higher, even if there's bearish divergence, okay? And say, yeah, wave 4 is totally in the territory of wave 2. Most Elliott wave theoreticians would have set their stops below, at least in this, like right here, because they're thinking there's no way it can come into this. Well, did it come into the territory of wave 2? It did not. It didn't. You see that right here? That's basically where wave 2 begins, right here. And wave 4 did not. So no, it's not a diagonal, but it's just a failed 5-wave impulse, okay? That's what it is, a failed 5-wave impulse. And that's the point of why I wanted to show you this, because you don't see failed 5-wave impulses every day. And those basically mean that the wave 5 ends below the wave 3. And that's interesting. And that's basically, that's the story that we're getting. Okay, this is the story that the market is telling us. We are being rejected. We're creating bearish price action. And what is bearish price action? Bearish price action is failed breakouts, where bullish breakouts has certain targets, and those targets are consistently unmet, and you're creating lower lows and lower highs. Okay, we've been creating macro lower lows and lower highs, but now we're getting the second part of that definition of a bearish market, where our targets to the upside are not being met. Okay, if you say that this was a cup and handle, some people were saying that this was a cup and handle like this, right? The target was 66K. If you're not saying it was a cup and handle, if you're simply saying that it was a bull flag, right? And this was the pennant, bull flag, bull flag. And this was the flagpole. Then you just take the distance of the flagpole, superimpose it to the side of breakout. We see that we didn't meet our target, right? The target was 66K. We came short of that. Okay. And now let's zoom in even more over here to what's going on here. So what's happening here? We see that after the 5 waves, what happens? You always get an ABC, right? After 5 waves, you get ABC. So 5 waves are up, you get an A wave, okay? Now you get a B wave. What do we know about B waves? Okay, and this is how you make entries. This is how you can trade more precisely, okay? Know where you're at, know where you are. So if this is an A wave, you know that this has to be a B wave, because B is counter to trend, okay? And what do you know about B waves is that the minimum retracement of a B wave is the 0.5 to the 618 fib, okay? And that would give you a zigzag correction. The next minimum correction or retracement for a B wave is in a flat correction, where you'd have to get 786 of the A wave, okay? Now, let's quickly measure this A wave and see where we're at. Let's turn our magnet back on. And we see that if we pull the Fibonacci retracement tool, we see that we literally just kissed the 0.5 Fibonacci of this A wave. And something else, just look left, okay? I'm not going to turn the VPVR on. Indicators are great, but you really need to learn to read price action. And that sometimes it's even more valuable, because it's screaming at you. Look at all of this price action. Look at all of this participation by market participants, right? Look at all of these buy and sells. This is staunch resistance. Where is it at? It's at the 618, okay? What is that saying? That means the chart is screaming to you. It's very unlikely that this correction be anything but a zigzag correction. Do you see that, right? Let's look left even further. What's this? Do you see that? All that activity, right? All this bunch of activity, that's basically staunch resistance. It's unlikely for price action to breach these levels. And remember, in order to make a zigzag correction, right, because we're in a B wave, right? A B wave can only be either a flat or a zigzag, right? So if this has to be a zigzag, right? We have to come all the way to the 786, right? The 786 fib would have to be our sort of minimum retracement. But looking at this, looking at that, it's unlikely that that be the case. And I want to draw your attention to something else that happened very recently. And this is just, looking at the character of price action. I want to draw your attention to this candle right here. I understand that we are on a very small time frame. We're on the 5-minute candle, but why do you go into smaller time frames? You want to go into smaller time frames to make pinpoint accurate entries and to see the dynamic of the market, okay? Don't let anybody tell you that, oh, it's useless to go on smaller time frames. Yes, it's more volatile. Yes, it's more risky. Yes, you do not want to trade exclusively on the smaller time frames, but you want to use the smaller time frames to make entries and to understand what the market is showing you, the story it's telling you, to confirm it with your higher time frame kind of thesis, right? So here, that candle that we'd seen is a bearish engulfing candle, right? We have this breakout of an inverse head and shoulders, right? Or at least it should be, right? Left, head, right. This is the breakout. That was the retest. This is the breakout. We're coming, and basically you can look at this as an inverse head and shoulders, or you can look at it as a 3-wave. 1, 2, 3. Why? Because we did A, 1, 2, 3, 4, 5. The retracement of B, remember our B waves look like this a lot, right? That's our B wave, kind of looks like that. It's basically a retest, a pivot, and then one wave down. That's our B. Remember, because we're in a B wave, and the B wave is comprised of an ABC wave itself, right? So we have our A wave, our B wave, and now the C wave, which is the impulsive portion of the ABC correction, right? So 1, 2, 3, failed. Why is it failed? Because you should have come up at least here, and then you get this rejection at this 0.5 fib, right? And then this is our 4, and then this is our 5th wave, right? So our 5th wave is basically our last kind of ditch effort at trying to make this retracement. And again, if it breaches the 618, it has to come all the way to the 786. It's unlikely because of all of this resistance. So right now, real time, you should see this be rejected heinously at this level. 1, because it's most likely going to print a zigzag. 2, because if it does breach the 618, even wick past the 618, it's got to work all the way up to the 786. So that's what I wanted to share with you. And after all of this is said and done, let's move back onto the higher time frame. After all of this is said and done, you're essentially going to have your C wave, which is your impulsive wave down, which is going to take you in to the 3rd wave, which is the largest and most impulsive wave, right, of your correction. So let's zoom out even more. So if this is the first wave, let's remove this for a second. And this. So if this is your first wave, this is your first wave, this was your kind of 2-wave retracement. Then your 3rd wave is going to have a minimum target of taking your trend-based fib extension from the top to the retracement, right? 2-wave. We're looking at a minimum extension of 1618 on average, right? Which is 55,383. This is why my C wave is got to be lower, because if this is the end of wave 3, right? Wave 3 usually retraces between 1618 and 2, but it can retrace as shallow as 1, but that's seldom ever seen. So we're expecting our next target to be about 55.3. Okay, hope this was helpful. Hope this was useful. Like, share, subscribe, and I'll see you guys soon.